All right, everybody. Hey, that was a great previous section. We've got an even more amazing section here today with two amazing folks who are just great at what they do. They're awesome. This might be one of the most beneficial sessions for you guys as you're out marketing and getting people to reach out to you that, hey, you're a note investor. Do you buy notes? Maybe you don't have the capital yourself to do that, but you can always still look at maybe potentially brokering. And we're honored to have Will Henning and Rachel Sims from First National Bank of America join us here, one of the biggest buyers of owner finance notes and notes out there. And they're joining us, I think, from Lansing, Michigan today. Is that right, Will and Rachel?
Yes, it is. 80 and sunny here in Michigan today.
Don't rub it in. We've had the depths of hell. Although it is a little overcast, we might actually see a raindrop or two here. But glad to have you guys here on Note Camp. I mean, awesome stuff there. How's business for you guys? Booming?
Staying busy. Yeah, I mean, this has been a weird year. There's no doubt about it. But staying busy. People still need to sell their notes.
Mm-hmm. So let's dive into that a little bit here for everybody out there. Unless you guys have a presentation you want to go through, or you just want to go back and forth here, or how do you guys want to roll with it? Just maybe share some of your specifics or what?
We do have a presentation. We're happy to go over that quickly because it might just answer quite a few questions right off the bat, and then we can go into some other things after.
Let's do that. That'll be great there. That'll help answer some questions there for you. And once again, I know you guys are busy. I know you're always running around looking at deals, making offers with the brokers and stuff like that. So thanks so much again for being on Note Camp.
Anytime.
No problem. We're going to share our screen, and Rachel's going to take the reins on this, Scott. But I think the presentation's maybe only 15, 20 minutes at the most, and then it's open-ended, and we can field some questions. We got a few questions, and if we end early, that doesn't bother us. Won't bother probably any of you guys either, so that's okay.
No problem.
From there.
Cool. Let's take it away.
Awesome. Did the screen pop up okay for you guys to see the building?
Yeah, looks good. Looks good, okay, definitely.
Great. Awesome. So First National, we've been buying notes since 1974. We primarily purchased first lien performing. Performing is a must. Contracts, deeds of trust, notes, mortgages, lease options as long as they can get converted. And we can purchase single families, land, mobile, commercial, second homes, rentals, properties used for rentals, multi-units. What we don't purchase is second lien, third performing. The sub properties used for maybe cannabis or places of worship, mobile home parks. Does that make sense? Things that we might not make an offer on.
Yeah, these are good. This is a good buy criteria, Rachel. We try to keep a really wide net on what we will make a bid on, but these are ones that it's pretty much a deal killer. So because we are a national bank, we just don't buy cannabis. If you just can't, as a national bank, it is still illegal on the federal level, so we can't buy cannabis. So these are just some nice general ideas of what we won't buy on the whole.
And then how does FNAC determine what we'll pay? We look at quite a few things. So we'll look at the interest rate. We look to see if there's a balloon in the transaction, the remaining payments, how many is left to go. We can look at a credit score, something, a bit more in the 600s might be a little bit more attractive than something in the 500 credit score. We look at the pay history. We look at, how they might have paid the first, while it's been for the last 6 months, or if it's been reperforming, if we'll have maybe a handful of payments to show that the reperforming is pretty solid. We always take in consideration into the equity, and then of course the property type. This one is kind of just to show how our notes are valued. Green is good. Red is kind of a bit on the negative side, so that might affect some pricing. For example, again, over something of 700 credit over something in the 525 range.
And what I like, sorry, chime in. What I like about this one is, different investors have different ways that they value the note. We know a lot of investors that don't even look at credit.
Yep.
And it's just not an issue for them. And so a lot of new brokers, even seasoned brokers, come and say, well, who cares? They've been there for 2 years, or they have 20% equity. And this is meant to just sort of give an idea of like, as an institutional buyer, as a bank, what do we put our value on? And we're much more credit sensitive than you might see in a lot of other investors. So we kind of like to lay this out for people because these are all going to be factors when pricing your note. But for us, something like the credit is exceptionally important.
Agreed. I like it. The process is pretty straightforward. We like to start off with a quote. So this broker or seller direct will provide information, will provide a quote. Hopefully that seller says yes. We'll have some due diligence going on, title work and appraisals. Once those items come in, we have a final underwriting process to see if any other items might be needed. Then it goes to processing. We'll have a processor review title, make sure it's pretty clear. And then hopefully that'll be leading to our hashtag close it.
Well, can we go back to that before?
Yeah.
Hang on a second. Let's
Yep.
go back to that a little bit. I think this is where some folks will have questions on it.
Absolutely.
What I love about what you guys do is when somebody's going to the fast quote part of your website and submit something in, you're getting a bid out usually within 24 to 48 hours. Just depends. If you submit something on Friday afternoon, it's not going to come out till Monday afternoon. Let's just face it, that everybody.
I don't work weekends.
Exactly, right. I know Will doesn't work. You get there. But usually a lot of times you come back with two offers. You come back with buying the full note or buying a partial set of payments. And usually it's somewhere between 24 and 60 months. And by the way, Cynthia Henry on here says, I sold my first partial to FNAC and it made it so very easy, by the way.
Nice. That's cool.
We're so excited to hear that.
Exactly. And that's the thing is that, you know, and one of the things you're going to ask too, it makes sense too, besides just filling out the information. Hey, do we have a copy of the note? Can we talk a little bit why that's kind of important for you guys in the front end? Because I think a lot of people will just throw shit against the wall. And I'm like, let's get a copy of the mortgage. Let's get a copy of the note. Why is that so important in your request?
It's so important just to have the terms confirmed, and then most importantly, seeing how the borrower signed. And people, let me to clarify that is the buyer can sign, for example, Rachel Sims, but if I sign as Rachel Sims LLC, sometimes knowing if it's personally guaranteed right up front is going to just determine our pricing. If we have someone who we know it's not personally guaranteed, it's in a trust or it's in a business name, you know, the borrower is the one who's signing in these names. We can't hold credit. There's if we had to take the property back, we can't go after an individual, right? So we just have no credit to go by. But if they have signed, you know, individual and they have superb credit, we have accurate pricing up front, and everyone wants the best, most aggressive offer up front. So those are good.
Time is valuable.
Yeah.
For everybody, and we want to be respectful of everyone's time. So Rachel's right. If it says LLC, that's a game changer, and now we have to price the loan differently. If we can pull their credit and it's really great or really low, like we just mentioned in our last slide, we put a lot of stock in that. And third, people don't remember their terms very well. They did it years ago, and they might say 2%, but it's actually, you know, they might say 5%, but it's actually 2%. So now you could have drawn up a bid, done the amortization, the whole 9 yards on incorrect data, and have to go back and requote. And that's just a pain. Generally, people hear a number and they don't want to hear sometimes a worse number, even if it is their fault. They told you bad data. It is just a pain.
There you go. It's a soft pull on a person's credit to pull that, correct?
Absolutely.
Yep, they don't know where to begin.
Yep.
Yeah, exactly. And then you like the fixed rate stuff. Because we've seen some creative, crazy stuff recently. You know, the ARMs, or I saw a loan that had been modified a few years back where it was borrower makes 12 months on time payments and then 24 months of 1 cent a month. That might have a low buy, right?
Yeah. Something we're not gonna definitely want to get into, but I'm sales, so of course I'm like, well, send it, let me see what I can try and do. But having just a flat interest rate over a time is definitely preferred.
Yeah, I mean, that's true. The system can handle quite a bit. So some notes are like, you always want to be 180 bips above LIBOR or something like that, or the Wall Street Journal, each quarter, the Wall Street Journal prime rate, we want to be 150 bips above that. Well, when we buy the loan, we're not gonna have somebody in our processing staff look up every quarter of the Wall Street Journal rate and
Right.
adjust it. What we'll probably do is lock that rate in. And we might even lock it in at a lower rate so that it's agreeable for the purchaser to amend it. So that sort of stuff is very hard to manage on a large scale, but we do complex payments all the time. We bought one not too long ago that was an orchard. And during the fall, payments were huge. Then the rest of the year, nobody goes to an apple orchard. So the payments really dropped and it kind of had the seasonality rotation to it. So we definitely can handle, I think, some pretty weird stuff. I mean, it's seller finance.
Sure. And of course, it's just, David says, this is just the fast quote, just a ballpark loan, a bid on it. Yeah, I mean, it's just a ballpark bid of what you've provided so far. That bid will change, obviously, once they start looking at the rest of the due diligence docs and things like that too. For everything, right?
The next slide, I think, might dive into that a little bit.
Okay. Cool. But yeah, I mean, it's just, I just wanted to bring this up because it's I get people that come to me all the time. I'm like, okay, here's what I would pay for. If you want a better bid, let's go to the fast quote and see what FNAC will pay for you.
Sure.
Yeah.
You know, and go from there. And then here's another important thing, and I know you're going to talk probably about, like, I'll shut up about the broker aspect. If somebody's wanting to make money brokering, I'll shut up and let you guys answer that question later on. I'm sure you've got it in your slide.
Thanks for letting us know, because we can't see the questions come up too while we're sharing the screen. So
Sure.
anything that pops up, just let us know.
Will do.
And then this one is submitting a quote. This is the quote staff, our acquisition staff, myself, Elena Kinney, Lucas Borma, Joe Waters. Collectively, between the four of us, we have 20 years experience into getting quotes out. We worked with sellers direct, brokers. We've, anything we've out there that we can purchase. Between the four of us, we can definitely find out a way to get a good bid out on the table. You can submit a quote directly to our emails or at www.fnacbrokers.com. You're right, the quote comes usually within a day, 48 hours is typically the most. And then all of the accuracy of our quote really comes from whoever's submitting it. Knowing a down payment is awesome to know about. Sometimes assuming just the current unpaid balance as the value can get tricky. So knowing how the property is being used is also great. The sooner receive an accepted offer, the sooner we can close. I would try to suggest to get people or brokers, if we give you a bid, try and let us know within, also within 48 hours how that bid went. And let's try and sign up that deal maybe within 5 days. About accurate notes and accurate quotes, having confirmed terms, again, knowing that's a social security number, an ITIN borrower. If it's vacant land, maybe having that parcel. Anything else about unique characteristics of a property, for example. Sometimes people don't think to consider that we have a really nice house and then we have this amazing pole barn in the back that's being used as a rental. All of those are just good to know that the property could be income flowing, or that there's just some additional things that you might not see from just a straight face evaluation, drive-by evaluation going by the property. Documents we require to get the process going, meaning like it being the valuation or the title work, is the note and mortgage and the broker seller agreement. Other items, the broker FNAC agreement or other due diligence can come once the the evaluation's kind of going. Pay history, something that's going to be something an underwriter always wants to look at.
It's also good to know, once you find a note that you want a broker, there's a lot of words here on the page, and we kind of erred on the side of showing you more, but like, it's actually not nearly as intimidating as you'd think. It's kind of super easy in a real sense, because we need the note, we'll make you the bid. You bring the bid back to your seller with your spread taken out of it. If they say yes, we have the documentation, we send it to you. It's not a lot, it's pretty easy. You get the yes, we send you a package of, okay, this is what we need, and the sooner we get it, the better everybody will be.
Right.
And I mean, it's gonna be really not anything different than what you'd see in a lot of other due diligence. None of this stuff is crazy. The sooner you get it, the better the deal goes, the faster it goes. And so this is all super great stuff.
Yeah.
And I'm glad we wrote it down for people to kind of get a flavor for it, but you don't need to be an expert. You know what I mean? We really provide all of this information and can help facilitate it, and have it available to give to you as a new broker.
Yeah. For example, it's putting 2 and 2 together. If you have a mobile home, you might need a mobile home title. If you have a house, you don't need a mobile home title.
Yeah.
Does that make sense? Yeah.
Yeah, that makes sense.
Okay. We have a basic transaction checklist. These are just additional items, you know, if we can get it up front, great. If not, and this will all be, the Excel sheet will be available afterwards too. But if the purchaser or seller passed away, we might need a death certificate, just additional documents we might need.
And real quick, on that last slide, you don't have to go back to it,
Yeah.
but you say, man, there's all this documentation. What we used to do is just get the bare minimum in the door to sign the file up. And then when it got to processing the title work, then we'd look and say, well, where's the mobile
Yeah.
home title? Let's go back and ask the seller. Well, they're deceased. Let's get the death certificate. But by that time, we're already 2 weeks
Yeah.
into the process. And
Yeah.
so it seems kind of like, what, duh, but we created a checklist, which of course we would give to any broker, of just the top 20 things that are like, are they deceased? Is it in an abstract state? Is it an LLC? Do you have corporate docs? Are you the executor of the state? And if you don't apply to them, you can just go through that checklist in a minute. No, no,
Yeah.
no, yes, yes, yes. But that starts the process much sooner. And we started that back in January of this year, and we are closing on average about a week and a half faster than we did historically. And a big part of that is just because you're asking for it sooner in the process. And it also lets you set expectations. Oh, this is a abstract in Iowa and you don't have the original. From day one, we're going to tell you that's going to push out your closing. It just is.
Yep.
Yeah.
Better to know that now than after the appraisal comes back, after it goes to underwriting, once you start processing. So anyway.
Good stuff. Yeah, and that's the thing is, it's like the loan officer. As a mortgage broker, they used to tell us, when you submit your package, you want to make sure that everything is done, especially when you get conditions back. Every condition is like an open door. You want to make sure that you've got all those conditions covered, because if there's not something and they got to look into that open door, that will drag stuff out. So it's like having a sticky note on every door there that you've got everything covered, everything in place. So
Yeah.
they can't close ASP, because there's everybody hates like, oh, we're going to close the end of the month. Well, the end of the month, well, I need these other 4 more documents now. Like, well, I can't get those in by the end of the month. It's got to go push to next month. You know what I mean?
Yeah, and there's always kind of that balance of like, hey, the guy's hot to try it, and
Yeah.
you want to sign the deal up.
Yeah.
So in our mind, we're gonna make what we need up front known to you, but then we have a checklist of like, all right, look at, you must have this to move the deal forward.
Yeah.
And then the other things we want you to start working on ASAP. But hey, if it takes you a week to get a death certificate, that's okay, but let's go ahead and get the process started. But at
Yep.
least you know you gotta get it.
That makes sense. Totally makes sense. Cool. David asked a question here. He said, didn't you imply that if a note is currently owned by an LLC, that it's probably a no-go for you?
No,
Oh, no, sorry if we.
sorry, yeah,
misinterpreted that.
we should backtrack.
So First National, we can make a bid as long as it's current first lien and not tied to like cannabis properties or, you know, mobile home park, something like that. But so if the seller's in an LLC, all we're saying is we'll need the LLC documentation for when they go to sign at closing, that yes, they are signer for this company, that they can fund, yeah, like your basic. Mhm. If the purchaser is in an LLC, so the borrower signed, you know, Mr. in their business name, we don't need their documentation because they're not signing for anything. That's just simply how we price.
Yeah.
Is that the answer? Okay,
Well, makes sense.
okay,
I'm glad you asked that, David.
yeah. We have a lot of LLC buyers and sellers. Our due diligence. So during this process, we're getting an appraisal order. Our appraisals usually take 2 to 5 days. This is a drive-by appraisal. Usually the borrower at this time does not know that they're coming to have an evaluation done. If they do, great. But they're not going inside the property at all. They're gonna take photos of the home, make sure the roof's in contact, there's no obvious missing door. And they're gonna run comps around the neighborhood. Title work's also being ordered. We have a national title company. They've been stellar. They get title back within 7 to 10 days to us. But if a seller does prefer us to use a certain title company a bit more local, we're absolutely happy to submit that order through their preference of a title company also. During this time, we might find out if a purchaser interview might be required. And then the file goes to our underwriting process.
Can you explain what the purchaser interview is a little bit?
Absolutely. So a purchaser interview, sometimes you might hear us say PI, or we might email the word PI. That's what it is, a purchaser interview. And that is pretty much just a quick touch base with the borrower to make sure, yes, they are utilizing the property. Maybe confirm. I've had properties where an evaluation came in, coupled in Florida after a hurricane, that there was obvious roof damage. The equity was a bit tight. We had somewhat of a pay history, and to get the file finally approved, it was me calling the borrower and saying, hey, we see that some of the shingles are missing. Is there any leaking in the roof? And the borrower was like, oh, absolutely not. We're gonna have this all tidied up here in the next week or so. That's absolutely great to know. And we end the call and that's it. Sometimes, we see all types of contracts, sometimes where the escrow is not being fully funded. So maybe the borrower having a conversation to either move a payment date back or to roll over an additional funds for an escrow account definitely can help a deal get approved instead of it being short.
And we are sensitive, very much so, to the likelihood of payoff. So we have sort of internal documents that help us determine, is this eligible to be waived? Because we totally get it. That's a real threat. If you got a guy with good credit, good equity, and he's at a whatever 8% interest rate,
Right.
and he doesn't know the sale's happening, that can really jeopardize it. So we need them. They're definitely important, but it's not a blanket statement that we need them for every transaction. We
Right.
realize they sometimes come with a risk, so we want to be sensitive towards that.
Well, that's the thing too, is you're getting who owns the note, you're getting permission to talk to the borrower too. You're just not straight calling them up.
Absolutely.
You're not violating, David asked, wasn't it illegal to call it? No, it's not illegal if you've got permission from the bank or the existing note holder to contact the actual borrower on the phone. It's actually happened sometimes. You see that happen in a lot of commercial loans. It's definitely there for, but if you're selling the note, like you said, you want to say, we're just calling to touch base with you. Now, one of the things I think you talked about too is also, if they were in a contract for deed, maybe the possibility of them converting to a traditional mortgage too is checking in with them on that too. Does that happen still, Will, or not?
Yeah, that still happens. That's becoming less and less common in Texas. Sure. I think most of the contract for deeds we see are in Texas, and we often like to convert those to a deed of trust.
Mm-hmm.
Something like
Cool.
that borrower might need a sign. A lot of investors, they were requiring purchaser estoppel letters even, but nope, we definitely don't need that.
No, that was really hot. That was a really hot thing in Texas
Yeah.
5 or 7 years ago, where every title company wanted a estoppel sign. And, I don't know what got in their bonnet, but we didn't enforce.
We didn't want to do it.
We weren't worried about that.
Yeah.
All right.
So yeah, just like you said, we'll definitely always get permission. We'll have a conversation if it makes sense or not to do it. Absolutely.
Cool.
I'm always hesitant about sharing this one because I'm always go. Of course, I'm sales. But we always kind of want someone to think like an underwriter when they bring us the file. I would say, if you're a broker and you're looking, you get a note or the address. Google the address, take a look online, utilize like the Google Maps. We like to walk through cities all the time, even though we'll just be sitting at Will's desk. We'll walk through how it's going, how's the next door neighbor look? Are you having a lot of sales in the area under 20,000? Do you have a lot of rougher area in the or in the neighborhood? If you know things like if there's insurance, why not? Sometimes collateral just, you can't get certain insurance. So definitely, if you can kind of look over the file and just see if it's something that you might be willing to invest in yourself, send it over. But hey, if it's current performing, I'm gonna tell you to send it to me anyway.
Yeah, this is really, I like the next slide.
Yeah.
Um,
Each deal is unique, seller financing. If it was generic loan, it would have gotten generic financing.
so then
We like unique.
but there's also just sort of this kind of frustration we find with people that come from traditional lending, where you just have a checkbox, check, and the deal's gonna get approved. And you sort of have to, in a lot of traditional financing, you have regulations, you have compliance issues. If they do A, B, and C, well, then D must follow. And really, these loans don't fit that. If they fit generic, then they wouldn't be in seller financing. So the deals are going to be unusual, and the underwriting is going to require more of a hands-on approach. And also, because you're not lending, you're buying, you don't have to be put into a box. You don't have to invest in what you don't want to invest in. So we sort of have that luxury to be able to say, yeah, I just don't want to buy this commercial property in blah, blah, blah. I just don't like the area. And that might be harder to do with more of a traditional lender. So the reason I say that is that works for and against you, but it creates some grayness in the transaction where we say, oh, you get our best pricing on homes with good credit and good equity. Yeah, but what if it's a dome house that runs off the grid and collects rainwater? That's not a home. But I mean, we get that. That's totally a real life example. And they were frustrated because it's a home. It's not a home. Or the credit is 700. So the guy just filed a BK and he's got one trade line that he's paying on.
Yeah.
We will look at that and kind of handle it. So the thinking like an underwriter is meant to sort of say, yeah, as you're looking at this file, here's some red button topics. Did it sell for a third of the price a few years ago? Is there bad pride of ownership? Like the stuff Rachel. But that leads to frustration. That frustrates people because it's not a guaranteed yes up front. It's a likelihood. We want to sign up deals that are going to get approved. We don't want to waste anybody's time. But I do think inside our company and outside, there has to be sort of a recognition that there is going to be sort of a hands-on approach, and they're going to make a judgment call on some of this stuff.
Well, it's also a lot like buying. I mean, buying owner finance is a lot like buying non-performing. There's yeses and nos to everything.
Yeah.
There's things that look good on one thing, and then other things are killers, or other things that adjust the pricing on this stuff. So yeah, it's I don't want to say it's choose your own adventure, but it is kind of like that. Hey, like you said, every deal is unique. Every deal has a different story behind it, and you've got to kind of read between the lines of what a lot of people are normally seeing to see what's really going on with the asset.
And one of the things that make our top brokers so great is they do vet their deals. They don't throw spaghetti against the wall. They fight hard to close everything, and so do we. But they have sort of that maturity and experience to say, yeah, this isn't going to close. Yeah, I thought it would. The appraisal came in. It's a dome house. First National had to kill the deal or reprice it. I'm not going to lose my cool. I get it.
Yeah, it happens.
And it just happens. Yeah.
Yeah, awesome. Good stuff there. And here's the answer. Let me ask a question here. Are you rewriting the mortgage? Well, they're not. If it's a true first lien they're buying, they're not rewriting the mortgage. If it's a contract for deed and they're going to buy that, they'd like to prefer it on a mortgage as that, then you would put it into a traditional 30-year mortgage and it's a new note of that stuff. But they're not just rewriting terms of this. That would be a modification. Yes, you would need the bar to sign off on any type of modification.
Very much so.
Yeah.
Yeah, we might do, sometimes the contracts have disagreements between the note and deed of trust. So we'll need to reconcile that. One contract says this, the other one says this. Sometimes we won't buy the transaction unless there's an escrow. So then we'll have to amend the contract to get the purchaser to agree for us to escrow. Sometimes the contract says, this note can't be sold, or the seller is responsible for insurance or something where it's like, yeah, we're not going to do that. Then we'll have to amend the contract. Any amendment that is not in the purchaser's favor must be signed off by both parties. So if you had a balloon coming due in a year, we don't have to get your approval to kick it out 2 years or to
Right.
lower your interest rate. That's in your favor.
Yeah.
We just go ahead and waive that balloon or lower it or whatever. But anything else requires both parties.
Yep, exactly. Cool, good stuff.
So this is more for some of our processing, what they're doing. They look at the title work, usually takes them just a few days. They want to review it, make sure it's clear, and they just want to close it. That's processing's the biggest thing. They always want to see a file get closed.
And that's the thing that's beautiful about this. You can be flexible. It's not a traditional property sale. So you can really do it, signing a few docs, making sure everything's there for the most part. And then that servicing is transferred. It's not like a traditional showing up to close on the property sale. It's a note sale. So there's a lot less when it comes to kind of closing.
Oh, yeah.
Yeah,
Oh, yeah, closing docs are sweet. They
Yeah.
take like 7 minutes to do. That's if you're going slow.
yeah,
And really, I'd say 90% of the time we have a mobile notary.
yeah.
They
Yep.
come to you, you sign the docs, we fund, and then we handle the recording, all that jazz. But yeah, it's
It's awesome.
some of the stuff you're signing your life away. This one's not so bad. It's it's an assignment, it's a couple of docs.
Yep.
It's pretty non-controversial. And then we wire you the money. We don't really do cashier's checks anymore. It's almost 100% bank wires.
Yeah, exactly. Makes sense. Cool.
Awesome. So getting started, this is your first step, is learning just a bit more about First National. And we look forward to seeing any quote requests come over. If you are brokering with First National, we would just need a completed W-9 and your wiring instructions. And a couple of those items are also on our website too. For more of our information, FNACbrokers.com, and then this slide will be available too for any point of contact emails or phone numbers you might need to.
Now, let me ask you a question. So we got folks on here are looking to broker a little bit. Can we talk a little about how you guys work with brokers? Does the broker turn a file over for you? Does the broker tell you what they're looking to make? And then they take it to the note holder to try to pitch that? Or do you take the file over? You could do a bit of both, or how's that kind of work, guys?
It kind of works both ways, truly. So sometimes we have brokers that they have not had the conversation, or the seller was unwilling to disclose how much they're willing to take. So the broker will provide as much information as they can. We'll give a quote. First National is making a quote of what we'll pay. So then it'll be the broker's job to just to provide a different number to the seller. We don't regulate your commissions. So whatever you have the seller sign upon, that's fine.
And then it's basically closing. There's two wires, one to the buyer or the note seller original, and then the commission is sent to the broker then.
Correct. Yep. So the broker's commission is not a HUD or anything. That's separate, a completely separate document that just stays between the broker and FNAC. Yep.
And they don't know we're buying it till the final funding. So at the closing table, they would sign First National docs, but a lot of our brokers, the seller doesn't even know who the funder is until the very end, and the commission is hidden. But I will say one thing about that. Our average commission tends to be about 6% of the unpaid principal balance. That works out to about $4,500. Some go up, some commissions are massive, some you're barely making any spread, but you're closing the deal, depending on how it goes. But one of the trends with our best brokers compared to our lower performers, they tend to take a reasonable commission and do more business.
Mhm.
Often newbie brokers go for the kill and they want to get a 15, 20% or whatever commission. And what ends up happening is you end up with nothing. Because either people say no, or the ones that say yes, those deals suck. So, you want to make money, you deserve to make money, awesome, good times. There's definitely give and take when you do great, other times not so great. But on the whole, you want to pick a number that can be accepted and that builds more long-term strength.
Right. Yeah, somebody says that FNACbroker.com does not pull up. Is that it? Is that their-
FNAC brokers, is there an S there?
I guess maybe.
I just like the FNAC. I just say FNACUSA.com. Because then you can go to the broker desk there. I'm going to put this in the chat roll here for everybody. So we've got that. Let me put this in for everyone. Boom. There we go. FNAC USA. Let me share it with my screen. We can.
Oh, there's an S. It's FNACbrokers.com.
There we go.
FNAC USA might go to some of the retail stuff.
Yeah, FNAC USA is the retail site.
FNACbrokers.com. So let's do that. Let me just go there. It's pretty simple. Yeah, there you go. Okay, yes, it's a little different fast quote there for folks. Okay. So let me share my screen so everybody can see here. Go to FNACbrokers.com. This will take you here to the FNAC Broker Desk website. And it's pretty simple. Just broker fast quote, click there.
Nice.
So
There we
I would hit the resource button at the top, Scott, if you don't mind.
Yep, hit it. There we go.
And then we have a different options for videos. If you want to hit the first one that gives you forms.
Here we go.
You can, I mean, a lot of this is really helpful. The broker submission worksheet, broker seller agreement. So maybe you're new to the business and you don't want to give them the First National info. We have a template that you can use, so you can get the deal signed up on your own, whether you use us or not. A social security verification form, they're going to need that. A W-9, we're going to need that. There's also a button down there that says more tools. That's going to have checklists, a commission agreement template that we're going to need you to sign with us. And even if you don't do business with us, just take our name off and put a different investor's name on. It's a good agreement to have to make sure that your seller knows what they're receiving and you know what you're receiving, and that there's no miscommunication. Business entity documentation if you're dealing with an LLC. But all these are just, I think, really common things that come up, and where else do you get it?
Right.
So those are helpful, whether you broker a loan or not. Those are just helpful docs.
Oh, totally. Totally. That's a good stuff there for everybody. Yeah. Yeah, totally agree. The form is definitely important there. Let's see, we go back to resources here. So it's, yeah, basically FNACbrokers.com, and then you see the resources tab. And what's great is if you click on the new brokers here too, it gives you some of the information that you've talked about already here, which is good.
And those videos are kind of cool. We put together, I think, some cool videos. We did one during the pandemic that talked about foreclosures, because everyone says, well, I'll just take the property back and resell it. And we actually did a pretty deep analysis into like, okay, well, what does that look like? How much money do you lose when you have to foreclose on a property? And so we looked at over 1,000 loans over a 10-year time frame and figured out how long on average do you go without collecting the payment?
Yeah.
How much do you spend per loan in foreclosure, and how much does the value drop from the time you bought it to the time you have to resell, to give you a better idea of like how troubling a foreclosure could be. So anyway, there's some cool data there.
You know, the biggest mistake I made, Will and Rachel, when I first started off as a note buyer, was that I went to foreclose and everything versus trying to modify. And I came from the real estate side. And I had people that wanted to modify and sit in their house like, no, you're a deadbeat. You know, first, you know what I mean? You haven't paid. This is back in 2008, 9, and 10 in the heyday. And I look back after the light finally went off, I was like, oh, I left so much money on the table if I just left the people in the houses. You know, cash flow instantly versus waiting for me to sell the property in 12 to 24 months. So yeah,
paying for the realtor, paying for plumbing,
Cleaning fees.
cleaning.
Oh my goodness.
I worked with our foreclosed assets during the recession, and they got beat up. Some weird
paint.
stuff. Yeah.
well, yeah, that's actually, I think, Matt, when we first met, you were doing a lot of that stuff. Yeah, you were doing. I remember you talking about the black paint. That rings the bell there.
Oh, man. I've seen it all.
That's a lot of money in white paint just to go
Yeah.
back on.
Yeah, you need a couple coats of kills,
Go
definitely.
purple or something at that.
Somebody on YouTube asked the question here, do you guys have any non-performing notes you're looking to sell?
Yeah, that's a great question. The answer is no. In short, and that's kind of twofold. One, our delinquencies are very, very strong in that they're low. We
Right.
just have very, very low delinquencies. And that's it's on purpose. We are picky about what we buy. Also, we do everything in-house. We foreclose in-house, we resell in-house, we might even finance it again in-house. And often the non-performing buyers out there we just can't see eye to eye on price. So there's not much inventory, and then even what inventory there is, usually we don't come to an agreement on price.
Well, and the thing, there's a difference there is you guys are financed differently than most investors. You know, you've got banks, you've got some pretty cheap capital to use to go out and buy non-performing assets. And that's what allows you to kind of buy at maybe a little bit higher price in some cases. I mean, you got your stipulations, but versus an investor like me, that's going to have money maybe at the cheapest at 6, 7, 8, others maybe at 10 to 12%, where we need to ask for a bigger discount to make it work. And that's why there's just a big difference in pricing. I mean, it's
Oh,
that's
very much so. No, that's a real competitive advantage when you're able to borrow from the Fed. Your cost of funds, even the way we do our cost of funds, is gonna be able to pass those discounts along to the seller, because our spread, our net interest margin, we just don't need as much, because one of your expenses is the money you borrow.
Yep.
And even with rates on the increase, we can still borrow at a good rate. The only downside to that is when you are borrowing money from the Fed as a bank, there are certain regulations. So delinquencies, it's called non-accrual status or a classified asset. When those loans go delinquent past a certain point, you need to keep way more money in reserve as part of your FDIC and things like that. So there's definitely delinquencies happen, there's risk, we get it, no problem, but there's a lot of negative consequences that come with us if a loan is in delinquency, and it ties up a lot of our cash. So we'd rather pay a little bit more, get something that's going to perform. So like a non-performer, I mean, we really have no appetite for non-performing loans, but there's great money in it. It's
Yeah.
just for the money we're borrowing, the business we have, it's not our thing. But that's not to say seconds non-performing don't make great money. I've got friends in both, and they do phenomenal.
Great.
Mhm. Well, that's the thing is you mentioned a really good thing. Being a bank, if you have a non-performing note on, you've got to add your reserves accounts. You've got to have that in there based on FDIC requirement, and that's a huge
That
amount.
allocation for loan loss goes up.
Yeah.
That loan has to fall under additional audits. It's just a mess. So if you get it, you get it, but you don't want to get it.
Yeah, as a bank. Yep, exactly. Now, I know you guys are always running numbers, and you mentioned 6% on average commission for a lot of your good brokers, stuff like that. Any numbers as far as the property value or percentage of LTV or UPB that you guys have got with your numbers and stats? You can look at, not holding you to any specific purchase price.
Sorry, what's the question, Scott?
So like average value of the property, and then maybe the average percentage of UPB you guys have bought off.
I'd say most of our UPBs are going to be in about the $90,000 range. So we'll look at any and all transactions. When it all washes out, it's going to have a UPB in about the 90% range. Usually it has about 3 years of seasoning. We'll bid on anything, but as things wash out, it usually has a couple years of seasoning. And then discounts really do vary on how long the transaction is. We'll go up to a 3% discount, but we'll obviously go much lower than that. Some of that is just the way the numbers work out. You got a long M and a low interest rate. Even if I want a low yield, if you're at a 1% interest rate, ugh,
Right.
Math is what it is. So what are you gonna do? But we'll go up to a 3% discount.
Yeah. So that's the thing. Somebody's wrote a mortgage at a 1% interest rate. They were smoking some crack. They took that owner financing class from somebody and didn't make sense.
So I have a thought about this.
I love it. When Will gets excited and gets up, you know you're going to hear some good stuff. Yeah.
The no percent interest rate automatically means a higher discount. That's the bad news.
There's good news
The
to that.
good news is you have nowhere to go but up with that money because you're earning nothing. So if you can talk to the seller, they're not in a rush to collect their money. I don't need the money. They'll say something to that extent. You say, okay, here's the offer. It's because it's at a no percent interest rate. We need to discount it to make an acceptable yield. But if you took that money and even if you put it in a CD or something modest that compounds over time, I can't think of an example where you end up often better off. So if it's a 15-year loan and you plop that into a CD that's just gaining interest, 9 times out of 10, your net result is going to be better with an interest that has no interest rate. So you're right. It's not great. I would never do that, but it does make for a good sales option to show them.
It happens. I'm working with a person right now, has 0% rate. I never thought they would take $100,000 discount. Never thought. But he came to me and said, you know what? I'm paying off my mortgage. I'm saving so much money on interest. And I'm able to invest at this amount with so-and-so. And I'm going to make well over that discount anyway and get all his money back. And it works out.
Well, that's the thing.
Yeah.
What you take with that payoff, what do you take with that capital you're paying on the note? If it's just sitting not making anything, yeah, you're not, you're losing inflation every day. But if you're going to take it, make 12%, lend it out, at 7-8%. Okay, great. You're doing great to grow it versus just sitting there letting it dwindle down. Now, I know in the past we've talked kind of about like a formula, of like you're looking a couple of years of seasoning, probably an 8%, 6, 7, somewhere in a 7-8% interest rate. You say 8% or greater. I like that. But you're also wanting some skin in the game. You want to see some sort of down payment from the borrower in a lot of cases too, or equity. If somebody's been into it and the property's gone up in value quite a bit, will that suffice, or a down payment? Is it okay?
So we'll look at a new note. If they put 20% down, that's great. We'll look at a note that's been seasoned, still has 20% equity. Great. Happy to look at both of them.
Awesome.
I will say there's a pretty good chance we won't write the value up if it's under a year old. So if it's a new note and they sold it for 100 and it appraises for 130, there's a very, unless you have a very convincing argument, we're not going to automatically give you that equity. But if they put 10% down, it's 4 years later, it appraises for higher, and it makes sense. That's another way to gain equity.
Well, that makes a lot of sense. I mean, Rachel, you and I were dealing with a couple of those investors who, they rehabbed the property, owner finance it, were trying to sell it 90 days later. And no bank is going to give you full value in less than 90 days on an appraisal. You've got to have that seasoning. I mean, even me foreclosing and trying to turn around and sell it as an REO, and somebody come and buy it from me as an REO, it's still the bank, no lender would give me 90. I had to wait 90 days for it to sit in there for the values to be considered, the appraised value to be considered in a lot of cases. So it's important for folks to know out there. And now, there was something else I was going to ask you. So, how valuable is it? Is it a good tick or a bad tick if somebody has a loan with a third-party servicing company?
That's fine.
Yeah, what I like about third-party servicers is they do help secure the balance. That is a real bear when you're buying from something that has not been professionally serviced, is if the balance is accurate. And with a servicer, it's just going to be, you just don't need to worry about that.
Yeah.
It's nice if they're handling the escrow too.
But the question is,
The shortage.
maybe the question is, does the algorithm for pricing take servicing into consideration? It does not.
Okay.
It puts its most amount of weight on credit, then on equity, then on seasoning. So those are going to be, and then the property type. Is it vacant land or is it your house? Those are kind of the big four that are really going to drive the pricing engine.
The probably only slight downfall with them is if the seller's paying that servicing fee. it's quite a bit, we might have to do something about it. Split in half or talk to the seller about moving forward, something like that, but the only negative I could really see is just when the seller pays like an $80 servicing monthly fee.
Wow, $80. That would be more of a non-performing versus like most of the performing stuff is like 20, 25 or less in a lot of cases.
Yeah, 25, 35, but yeah, 25 sounds fair.
Yeah, I mean, that's not too bad. I mean, like Covey Financial we've got on tomorrow, they're due $15 across the board, but they're not going to handle anything.
Wow.
Yeah.
That's good. That's a good price. But I would say, yeah, credit and equity are the big ones. We do take seasoning into consideration. But for us, we found a better indicator of performances.
Yeah.
How do you pay other people, and what skin do you have in the game? What's your exit strategy?
Right. Question for you, rural wise, is there a location you prefer, something in town or out of town or out in the middle of sticks? You know, anything that, I mean, obviously this probably affects a little bit your ability to collect, but is there a difference in pricing dramatically for rural versus something that's a little bit more, in town?
Maybe for vacant land.
Yeah, I would
Rural.
say as far as homes go, when like the recession hit and values fluctuated, I don't believe there was really a noticeable difference between rural and urban areas. Where like, oh, this area got protected, or this place because it was rural, now the values really dropped, but because it was urban, it didn't. That didn't seem to make a difference. So I wouldn't say we're too sensitive if it's a small town, but then Rachel's right. If you're just out in the middle of absolute stinking nowhere, we had one we were trying to buy in Alaska, and we wanted to get the appraisal done, and we had to pay. We didn't, but we would have had to pay for a helicopter to get there. And it was like, yeah, you know what? This might be a little too rural for my taste.
I want to know what a flyby appraisal costs. versus a
Oh, I
drive-by.
know, man alive.
Oh,
I was like, yeah, we're not buying that.
Yeah.
I appreciate that. No, rural is I would say, especially with vacant land.
Yeah.
We just don't buy into vacant land. And if it doesn't make sense, we don't care what the comps say. Some of these vacant land lots, we just look at it and we're like, yep, no, nope, I don't care your equity, I don't care your seasoning. We're not putting $100 grand into that.
Yeah, we've seen a lot here in Texas. I'm always looking for land in that case, and we're like, okay, let's see what we find for 100 acres. 100 acres owner financing. I was like, pretty chance. Like, yeah, I don't think FNAC would ever end up buying this just because it's way out in the middle of the boonies, and
Maybe on a partial and not at a smaller yield.
Yeah, exactly. At 5% interest rates, like I don't think FNAC would be this. Otherwise, it might be something for brokerage.
Yeah.
Now, let me ask you a question. And I may have missed this. Mobile home loans.
Yeah.
You're looking at those as long as they have a certificate of attachment, correct? Not just the mobile home where the zip code changes every 5 minutes while it's driving down the road, right?
Correct. So it can't be a mobile without land. They don't necessarily have to surrender title by all means, but as long as if we had to take the property back for whatever reason, we're also getting that land that it's on.
Mm-hmm.
Yeah.
And for those out there, that's where, if it's on there, that means really a lot of times the tire is removed or the tongue is cut off and it's attached there to the house.
Yep.
Or attached to the land of some sort. It doesn't have to be on a concrete foundation, but it's really attached to that aspect. The ability for you to pull it out and take it off and, put the Beverly Hillbillies on the back, not the same thing.
Watch it just drive away.
Yeah, exactly. We were somewhere, we were somewhere in a house and we're like, oh, look, that house's zip code is changing every 5 minutes.
Yeah.
And I will say RVs are different. If it's an RV, we don't consider that mobile. That's not a part of the land at all. It's just the land that we would look at that.
But with home affordability stuff in the need for that increase, are you seeing maybe an increase in owner financing on like tiny homes? Have you seen any of that pop up where it's actually not on a trailer? How does that affect?
What are they when they're all of what are they? They almost look like trains. Those shells, like cart. What are they? They're just
storage containers.
Yeah, big storage containers. I recently bid on something like that. They The reason why I was able to is they just had solid photos inside and outside. There was good acreage on it. They had been there for a very long time. It wasn't a brand new, here, let me throw this together. There's no inside photos or anything like that to look at. Sometimes we look at it as land value. The land value is still there. But yeah, we have seen a few of those.
Good stuff there for you. What's, you talk about bidding on those, is there a note you guys bought? And Will, it might be a better question for you, who knows, been around a little longer, but a note that you regretted buying, or a borrower on a note you regretted buying the note on. Any trouble borrowers?
We had one that was completely fraudulent.
Oh, yeah.
The note didn't exist, the notary didn't exist. That one was no bueno.
That was bad. There was no purchaser, really.
Yeah, that was really, really weird one. But that's crazy. That's one out of a million. That's
Right.
one that we bought.
What about that one when they were like, the collateral is damaged and unlivable? Was that note in? Don't remember that.
They all sort of run together. Yeah, we've had a couple where you buy them and they dispute the balance.
Right.
Those are ones that we're really trying to clamp down on. Is, will they repay? Yes, but you want to make sure that they know the note terms and that they agree to the balance. Yeah. And oh, I forgot to tell you that the balance was paid down, and so now you're stuck where the purchaser does actually deserve a lower balance. But now you got to talk to the seller and you got to get that figured out, and they've already received their funds. And so that's probably something that we are trying to sharpen our pencils on right now, is to make sure. In fact, we're just probably next week going to re-release our purchase and sale agreement with, I think, more specific and tighter wording to really make sure that we get the right balance. And we do the vast majority of the time.
Sure.
But that seems to be something recently that we're encountering, that we're trying to tighten up on.
That makes sense. Melanie asked a really good question, which would be my next question. What are some of the things that your top brokers are doing to find notes for sale? Rachel?
Ooh, to find. I would say they're still utilizing the counties. They're still using Netter Online. Florida, the state of Florida, a lot of their notes are just available. You can, if anyone knows Netter Online, it's all the states. You can click on Florida. All the counties will pop up. You'll click on a handful of them. You can type in note mortgage. I forget exact wording, but it'll come up, note mortgage, and then you have the note in front of you. You can look at the terms, you can get a bid, and sometimes you'll find the mortgage right there. And then the mortgage will have the seller's address. And then you can just mail out a letter just like that. Then it costs you for that lead, right? Paper stack, I will always, show people them. Paper stack's a great place where they can find notes for sale. Usually it always has, their balance. It's quick to get any missing information there. I would say Scott Arpin is another one who has lead lists.
What was that, Rachel? What was the last one?
Scott Arpin. He has lead lists. List source is another one. List source. I want to say there's one more that's just not coming right off the top of my head.
SEO, it's a good website.
Yeah.
And then a lot of our brokers do also work more local leads.
Sure.
So
Facebook.
local Facebook, REO groups, real estate investment groups.
Yep.
Title companies, closing attorneys. We're not going to be able to work those small leads, but there's little business there.
Yeah. And even just having conversations, like Michigan will have a realtors network, and it's mostly a different origination, but just letting real estate agents know, or other servicing companies know, contacting them. A lot of people can have leads for you. You just kind of got to get in front of them, really.
It all comes down to marketing. I mean, whether
Marketing.
you're, and I'm not a fan of doing a lot of direct mail to get a low response rate direct mail. It's always those good relationships. And the more you can market out, the more it makes it easier for people to respond to you. I know a lot of those new originators, they get a lot of letters and tire kickers. But that's why you find somebody and leverage your local relationship, your local realtors, your local market, especially now with rates going up and things like that. There's a lot of great ways to just get the word. Hey, if you got a troubled property or a borrower who's in a situation, owner financing can be a potential strategy to buy on and make some things work too.
Well, and once you buy a list or you get a name, there's a lot of life in that. So for example, half of our closings last year, we quoted more than once. And I'm not saying like we quoted them a day later. We gave them the quote. You have a pocket that will convert right away. Then you have a completely different pocket that you quoted. And then 3 months later, you follow up with them. Then you follow up with them 3 months later. And then finally, the light bulb goes off and you get the yes. So just because, maybe I got 10 leads and I only got 2 of them to convert, that doesn't mean that the 8 are gone. There's still a lot of juice left in that 8.
Yeah, no doesn't mean not now. I mean, no means not now. Not
That's
really.
exactly right. Yep.
You know what I mean?
Exactly right.
And a
And
good tip, go ahead, sorry.
No, go ahead, Rachel.
I was gonna say a good tip when you get the seller on the phone, whether it be the first time or their second time, always try and get their email, because then that's a free way for you to just follow up with them. You don't have to send out more mailers to them. An email goes a long way, I would say, a lot of times too.
Yeah, it's also cost effective. You're mailing out a lot of leads too there for you. And then, but it also makes it easier for you to put it in a CRM, or actually, one of the things I like doing is pre-writing the email. Literally, okay, so I'm gonna go ahead and pre-write the email and schedule it to go out in 90 days or 30 days, or put them on my list to touch base. And so it looks like it's a warm email, but it's something that's mass to my leads that didn't convert. You know what I mean?
Oh yeah,
Absolutely.
that's awesome. That's a good idea. Yeah.
What other questions do you guys have for Rachel and Will out here? Anything you guys are focusing on here in the fourth quarter? You guys putting some money aside because you think you'll see a lot more stuff here in the fourth quarter or the first of next year? Or any economic stuff you're looking at, Will, to affect kind of you guys' pricing?
Cost of funds is really kind of fair this year. Oh my word. I would say that is a struggle. Is rates have gone up so fast. The paper you're buying is 2 years old or 18 months old. Well, a year and a half ago, 5.5% or 6% probably was a pretty decent loan and well above prime. And now you're not going to be buying at a 5. You're not going to be buying at a 6. So I'd say that's a real issue we're working through. Rising rates is an issue we're working through. But other than that, seller finance does seem to have a little bit of insulation from the outside world. Just because this happens in the market doesn't necessarily mean it happens in the seller finance market. So sometimes the rates go up, that affects our pricing, and that can work for or against you. But by and large, recordings are still coming in, calls are still coming in, people still need to sell their loan. It will be curious to see how appraisals do if the market holds. But you do the best you can. You try and make smart decisions based off the info you have. But those are some of the big things we're looking at.
Somebody asked online here on the YouTube live stream about New York. Are you buying notes in New York and New Jersey?
Yep, New York, New Jersey, Ohio is another big one with land contracts that we get questions about. We keep that in the back of our mind. Maybe we have to price it accordingly. Maybe we underwrite it with a little bit more of a skeptical eye. But yeah, we'll buy in those states.
Now, what about some institutional scratch and dent stuff? You guys ever look at that stuff?
Oh yeah, no, that is not our division.
Right.
We have another division in the bank that has their own process. The two are totally processed different.
Yep.
But yeah, we're very active in the scratch and dent business. Very much.
Yeah, I say because one of our students got a small portfolio, and the discount that they were looking at, I was like, oh, this might be doable. Let's run it by you guys over there to see it. And came back. I was like, oh, we might be able to make this work. Well,
Nice.
Cool.
Yeah.
Yeah. No, we have a strong scratch and dent business. Very much so.
Yeah, I love it, and that's something most people didn't know about. I was like, let's call our friends in Lansing there. Now, do you guys still have an office here in Austin?
We do. Yep. right on West Avenue, not far from 6th Street, maybe a couple blocks from 6th Street.
Yep. Yeah, they
So,
sure.
It's a very cool spot, real close to the downtown. We do a lot of business in Texas.
Yeah.
Lot
Yeah,
of
well,
business.
Texas, best state to originate in a lot of cases here, the
It
fast
is.
foreclosures.
And you guys, your property values hold, your laws are agreeable.
Yep.
There's a lot of contracts to buy. We find ourselves doing a lot of business down south, but Texas in particular. So if you're gonna be down in Texas, Austin's a cool spot to be.
Yeah. Oh, hang on a sec here. Hang on, I ended up muting somebody the wrong here. Hang on here. Mute. Rachel and Will, I accidentally muted you there and stopped your video. The next speaker on, I want to go in there. Sorry about that.
Oh,
Try to-
you see us now, we're back.
Yeah, you're back there. Sorry about that.
No
So
problem.
now, one of the things, are you putting these newly rich, because we've got Max Bailey coming on from Call the Underwriter here just after that there a little bit there. And is there on the originating stuff, how much Dodd-Frank compliance are you guys looking at too during your offering?
Yeah, I would probably defer that question to that group that specializes in it.
Yeah.
I don't know, but I mean, they have a full team that would underwrite it and review it, and they know how to close these things fast, real fast. But they've got a whole process worked out.
Awesome, good stuff. Well, we'll get
They're
more
buying
of
a
those.
lot.
Good. Best way for folks to go is it the FNAC brokers.com website to go on there and get rock and roll, get everything submitted, get rock and roll
Yes.
with everybody today for you.
I like it.
Same.
Yeah. So, well, Rachel, Will, thank you so much for coming on Note Camp here and sharing your time. I know it's a busy week for you. Thanks for Rachel. Thank you for coordinating Will.
Anytime.
Thanks,
Real
Scott.
bad sometimes.
We always appreciate seeing you.
Yeah, same here. Well, it's funny was like Rachel's like, oh, don't worry about it. I'm booking him and I'm gonna herd him in.
Well, I'm glad you did.
Anytime.
It was fun to see you guys.
Yeah, definitely. We gotta get together sometime soon as well. So
Oh.
thanks, guys.
See you,
Appreciate
Scott.
it. See you guys later. Yep.
Bye, guys.